All right, so we're diving into Brazil's economy in 2025, and well, it's a bit of a tightrope walk.
Yeah, it really is.
We've got high interest rates and global uncertainty. It seems like there's a lot to unpack here.
Definitely. And, the sources you've provided paint a pretty complex picture.
Yeah,
We're essentially talking about a survival mode strategy for businesses.
right.
And to understand that we really need to zoom out and look at the global forces at play, particularly in the U.S.
Right, because it's not just Brazil dealing with this, right? This Perspectiva 2025 document keeps bringing up the U.S. and a Republican election victory. How does that impact things all the way down in Brazil?
Well, it all comes down to interest rates.
Uh,
You see, a Republican win in the U.S. usually signals higher interest rates globally.
mhm.
And when the U.S. sneezes, a lot of the world catches a cold, especially emerging markets like Brazil.
Right.
It's like a domino effect.
Okay, so higher U.S. interest rates ripple outwards. But why is that bad news for Brazil?
Well, for one thing, it makes it more expensive for Brazil to borrow money internationally. But there's also the issue of investor confidence.
Right.
Higher returns in the U.S. might draw investors away from riskier markets like Brazil, putting downward pressure on their currency and making it harder for them to fund their own growth.
So it's not just about the direct cost of borrowing, but this whole perception of risk that shifts.
Exactly.
And that feeds into what the document calls Brazil's survival mode.
Exactly. The document predicts Brazil's benchmark interest rate. The Selic could hit 14.75% in 2025.
Wow.
That's the highest it's been since 2006. And it really does signal a shift towards battening down the hatches, focusing on stability over rapid growth.
14.75%. That's a lot. I'm trying to imagine being a business owner in Brazil right now.
Yeah.
Wouldn't that make it almost impossible to take out loans for, say, expanding your business or investing in new technology?
It certainly makes things tougher.
Yeah.
Think of it like this. Every loan you take out suddenly becomes way more expensive. That eats into your profits, making it harder to invest in new projects, hire more people, or even just stay afloat.
And we know from these sources that Brazilian businesses were actually on a pretty good path with digital transformation.
Right.
Lots of investment in e-commerce online platforms. But wouldn't those plans get shelved if borrowing is that costly?
You're spot on. Digital transformation often requires significant upfront investment.
Yeah.
When interest rates are this high, companies might be forced to prioritize short-term survival over long-term innovation, which could hurt their competitiveness down the line.
So there's this double whammy external pressure from U.S. interest rates and internal challenges with Brazil's own economic policies. But the document also mentions that Brazilian companies are not overly indebted, right? Something about net debt and EBITDA.
Yes, that's a crucial point.
Okay.
The report highlights that net debt is currently at 1.8x EBITDA, which is relatively low compared to historical levels.
Okay.
EBITDA, or earnings before interest, taxes, depreciation, and amortization, essentially reflects a company's core profitability.
Okay. So 1.8 times EBITDA. What does that actually tell us? Is that good news or bad news in this survival mode situation?
It's a bit of both.
Okay.
On the one hand, it suggests that Brazilian companies aren't drowning in debt, which gives them a bit of breathing room as interest rates rise. They're not as vulnerable as they could be.
Right.
However, this lower debt level could also indicate that companies haven't been investing as aggressively as they could have been in recent years.
Okay.
It's a sign of caution, perhaps even stagnation, which might make it harder to catch up in a rapidly evolving digital landscape.
I see. So less debt is good in the short term because it means companies are less exposed to these rising interest rates. But in the long term, it could mean they've missed out on opportunities to grow and innovate.
Precisely. It's like a tightrope walk, finding that balance between cautious financial management and bold strategic investment.
All right, so we've got this backdrop of survival mode, driven in part by global factors like U.S. interest rates. But you mentioned that some sectors might be hit harder than others, right? Let's zoom in a bit. Which industries should we be watching particularly closely?
Definitely not all businesses are created equal when it comes to weathering this kind of storm.
Right. Let's start with those that are likely to feel the most pressure. Think about industries that rely heavily on borrowing and have revenues closely tied to interest rates.
Okay.
The report specifically flags sectors like retail, utilities, and real estate as being particularly sensitive. They could face a real squeeze as borrowing costs rise and consumer spending tightens.
Okay, that makes sense. If people are worried about their own finances, they're probably not going to be rushing out to buy new clothes or upgrade their homes and utilities. Well, those are pretty essential, aren't they? So how do they get impacted?
Utilities often carry a lot of debt to finance their infrastructure projects. When interest rates climb, their debt servicing costs go up, which can put pressure on their profitability.
Right.
They might have to raise prices, which could further dampen consumer spending in other areas. It's a vicious cycle.
It sounds like a tough spot to be in. But on the flip side, you mentioned there might be some sectors that actually benefit from this environment, right? Like banks, maybe.
You're catching on. Banks often do well when interest rates rise.
Yeah. They can charge higher interest on loans, increasing their profit margins. Plus, their earnings are less directly impacted by fluctuations in consumer spending compared to, say, retail.
So they're kind of insulated from the worst of the storm. Any other unexpected winners in this survival mode scenario?
The report also highlights companies with strong cash positions.
Okay.
These are businesses that have built up significant reserves, allowing them to weather economic downturns without having to rely heavily on borrowing.
Yeah.
They might even be able to make strategic acquisitions or invest in new technologies while their competitors are struggling.
So it's not all doom and gloom.
Right.
There's this element of the tortoise and the hare.
Yes.
The companies that have been prudent and built up their reserves might actually come out ahead in the long run.
Precisely. Sometimes playing it safe can be the smartest strategy. And speaking of strategy, the report doesn't just outline the challenges, it also offers some investment recommendations.
Right, it talks about Brazilian stocks trading at attractive valuations, but also mentions this thing called the Brazil discount. What's that all about? Sounds like a clearance sale I don't want to miss.
It's tempting to think of it that way, but it's a bit more nuanced than that.
Okay.
The Brazil discount means that investors tend to demand a higher return to invest in Brazil compared to, say, more developed markets. They're factoring in things like political risk, economic volatility, and currency fluctuations.
So even if a Brazilian company looks like a good deal on paper, investors might still be hesitant because they perceive it as riskier.
Exactly. It's like buying something that's on sale but comes with a warning label. You might get a great price, but you're also taking on a higher level of risk.
Okay, so the Brazil discount adds another layer of complexity to this whole equation. But even with that in mind, the report still recommends some specific companies, right? What's the general approach here?
The emphasis is on caution and resilience. They're favoring companies with strong balance sheets, low debt levels, and a proven track record of dividend payments. Essentially, businesses that are built to weather economic storms.
That makes sense. It's like battening down the hatches and choosing companies that can ride out the rough seas. Any specific examples that jump out?
They highlight a couple of pulp and paper companies. Klabin and Cellulose Suzano both are seen as relatively resilient with strong global demand for their products.
Okay.
And of course, no Brazilian portfolio would be complete without a little Petrobras action.
The oil giant.
Eh.
But even with Petrobras, they're recommending a cautious approach, right?
Exactly. The focus is on its dividend yield rather than betting on massive share price appreciation. It's a way to get some exposure to the energy sector without taking on too much risk.
So we've got a pretty good handle on the macro picture and the overall investment strategy. But remember that surprising addition to our source material, the Digital Influencer Report. I'm still curious, how does that fit into all of this?
That's where things get really fascinating. In a challenging economic environment, understanding consumer behavior becomes even more crucial. And who better to provide insights into the minds of Brazilian consumers than digital influencers?
Right.
They have a direct line to their audience's needs, desires, and spending habits.
Right. It's like a window into what's actually happening on the ground beyond the economic forecasts and spreadsheets.
Yeah.
So what does this Radar Influencia digital report tell us about the Brazilian digital landscape?
First of all, it highlights the sheer scale and diversity of the ecosystem. We're talking about hundreds of brands vying for attention across social media, e-commerce, and online platforms. Competition is fierce.
And the report ranks the top brands by influence, right? Who comes out on top in this digital popularity contest?
It's no surprise to see giants like Mercado Libre, Nubank, and Google at the top. They've invested heavily in building strong digital presences and engaging with consumers online. They're practically household names.
So no surprises there. But the report also mentions something unexpected, something about brand awareness and innovation.
Here's where it gets interesting. The report found that there's actually very little correlation between brand awareness and perceived innovation.
Wait, so just because a brand is well-known doesn't mean it's seen as innovative. That's counterintuitive, is it?
Well, it is.
Yeah.
It suggests that Brazilian consumers are savvy, They're not just swayed by big names or flashy marketing campaigns. They're looking for companies that are genuinely pushing the envelope, coming up with new solutions to meet their needs.
So brand awareness is just the first step to really win over consumers. Companies need to demonstrate that they're forward-thinking, adaptable, and constantly evolving.
Exactly. It's about more than just having a catchy jingle or a recognizable logo. It's about creating real value and staying ahead of the curve.
And that's where companies like Nubank and Google really shine, right? They're not just influential, they're also seen as pioneers in their respective fields.
Absolutely. Nubank, with its user-friendly banking app and focus on financial inclusion, has disrupted the traditional banking sector, and Google, well, they've practically become synonymous with innovation, constantly pushing the boundaries of technology and information access.
It's almost like this digital influence report adds another layer of analysis to our investment decisions, doesn't it?
Yeah.
We look at the financials, the macro trends, and how these companies are perceived in the digital landscape.
It's all about connecting the dots. The economic situation is important, of course, but so are factors like consumer behavior, brand loyalty, and, as you said, digital innovation.
All right, so we've got this multifaceted picture of Brazil's 2025 economy. We've talked about the challenges, the opportunities, and the importance of adaptability. But I'm curious, the source document also delves into specific sector recommendations. Where should we start?
Well, given the overall survival mode theme, it's no surprise that the report recommends a cautious approach across the board.
Right.
But there are some pockets of optimism. They seem particularly bullish on the agribusiness sector.
Interesting. Why is that? Is it just because Brazil is an agricultural powerhouse?
That's part of it. Brazil is a major player in the global food market, and demand for agricultural products is only going to increase as the world's population grows.
Okay, that makes sense. So they're betting on Brazil's ability to feed the world even amidst economic uncertainty. Are there any other sectors that stand out, either positively or negatively?
One that might seem counterintuitive is capital goods and transportation.
Yeah.
You might think that a slowing economy would hurt these industries, but the report actually sees potential for growth in companies like WG and Marco Polo.
WEG, the industrial equipment manufacturer, and Marco Polo, the bus maker. I wouldn't have guessed those would be on the winners list. What's the thinking there?
Both companies have strong track records and are well-positioned to benefit from infrastructure investments both within Brazil and internationally. WEG in particular is a global player with a focus on renewable energy solutions, which is a growing market, even in uncertain times.
So they're tapping into these long-term trends that transcend short-term economic fluctuations. Smart move. What about the tech sector? Brazil has a pretty vibrant tech scene, but how is it expected to fare in this survival mode environment?
It's a mixed bag, as you might expect. The report advises caution when it comes to e-commerce giants like Mercado Livre.
Okay.
While they're dominant players, the high interest rates and economic slowdown could put a damper on consumer spending, which would directly impact their growth.
That makes sense. People are more likely to tighten their belts when money is tight, even in the digital realm. But the report does like a couple of smaller tech companies, right? Tim and Desktop.
Exactly. They're looking for companies that are either undervalued or have strong growth potential that's less dependent on overall consumer spending, in Tim's case. They believe the company is well-positioned to benefit from the rollout of 5G technology. And Desktop, a software company, is seen as a potential beneficiary of the ongoing digital transformation in Brazil, particularly among businesses.
So even within the tech sector, there are these pockets of opportunity where specific companies might outperform the broader market. It really does come down to careful selection and understanding the nuances of each industry.
Absolutely. And it's not just about picking winners and losers. It's about understanding the bigger picture and how different forces from global interest rates to local consumer behavior interact to shape the economic landscape.
Okay, so we've covered a lot of ground here. The macro trends, the survival mode strategy, specific sector recommendations. But before we move on, I want to go back to this idea of the Brazil discount for a moment. You explained it well, but I'm still trying to wrap my head around what it means in practical terms. How much higher of a return might investors actually demand? And what does that translate to for someone considering investing in Brazil?
That's a great question. Let's put some numbers to it.
Yeah.
Imagine you have two investment opportunities, one in a developed market like the U.S. and one in Brazil. Let's say the U.S. investment is expected to yield a 5% return because of the Brazil discount. Investors might demand a 7% or even 8% return on the Brazilian investment to compensate for the perceived higher risk.
So they're essentially saying, okay, we're willing to invest in Brazil, but we need a bigger potential payoff to justify taking on that extra risk.
Exactly. And this higher required return can make it harder for Brazilian companies to attract foreign investment. They have to offer more enticing returns, which can eat into their profits or make it more expensive to raise capital.
It's like this invisible hurdle they have to overcome. They're not just competing with companies in their own sector, they're also competing with this perception of Brazil as a riskier investment destination.
Precisely. It's a constant challenge, but it also presents an opportunity for savvy investors. If you believe in Brazil's long-term potential and are willing to take on a bit more risk, you might find some hidden gems that are undervalued by the market.
So it's a balancing act. High potential rewards, but also higher potential risks. And that brings us back to this whole idea of survival mode. It's not just about weathering the storm, it's also about finding ways to thrive in the face of adversity.
Well said, and that's where innovation, adaptability, and a deep understanding of the market come into play.
All right, so we've covered a lot of ground here. We've talked about macro trends, sector-specific outlooks, investment strategies, and even the role of digital influencers. But I think it's time to zoom out again and bring it all together for our listener.
Right.
What are the key takeaways from this deep dive into Brazil's 2025 economy?
First and foremost, buckle up. It's going to be a dynamic and potentially turbulent year. The global economic climate is uncertain, interest rates are high, and inflation is a concern. Brazil is facing both internal and external pressures, prompting the survival mode approach.
But it's not all doom and gloom, right? There are still bright spots. Certain sectors like agribusiness and select companies in capital goods and technology are expected to perform well. And even in challenging sectors, there are companies that are well positioned to weather the storm thanks to their strong financials, innovative strategies, and digital savvy.
Exactly. It's a mixed bag, but the key is to be informed, selective, and focus on quality companies with strong fundamentals.
And remember that Brazil discount, it's a factor to consider, but it also presents potential opportunities for investors who are willing to do their research and take on a bit more risk.
Absolutely. And perhaps the most important takeaway is the survival mode doesn't have to be a negative thing. It can be a time of adaptation, innovation, and resilience. It's about finding creative solutions, embracing new technologies, and building businesses that are not just built to last, but built to thrive in a constantly changing world.
I love that perspective. It's not just about surviving. It's about using this period of challenge to emerge stronger and more adaptable. And speaking of adapting, there's one more piece of the puzzle we haven't fully explored yet, the digital influence report. We talked about some of the key findings, but I think it's worth digging a little deeper into what it tells us about the evolving relationship between brands and consumers in Brazil.
You're right. It's not just a sideshow. It's a crucial part of understanding how businesses can not only survive, but thrive in this new landscape.
Let's delve back into that fascinating report. Remember, it revealed some pretty surprising things about how Brazilians perceive brands, particularly when it comes to innovation. Let's unpack that a bit further.
One of the most striking findings was that simply being a household name isn't enough anymore.
Right.
The report showed very little correlation between a brand's overall awareness and whether consumers perceive it as innovative.
It's almost like saying just because everyone knows your name doesn't mean they think you're cool or cutting edge. That's a tough pill to swallow for some of these big established brands, isn't it?
It is.
Yeah.
It really challenges the old way of thinking about marketing and brand building.
Right.
You can't just coast on name recognition.
Right.
Brazilian consumers, especially the younger generation, are looking for companies that align with their values, embrace new technologies, and offer solutions that fit their modern lifestyles.
So it's not enough to be on everyone's radar. You need to be on their radar for the right reasons.
Yeah.
And that's where this idea of innovation comes in. The report highlights companies like Nubank and Google as prime examples of brands that are perceived as both influential and innovative.
Right.
What are they doing differently?
Both companies have really mastered this idea of anticipating what consumers need before they even know they need it.
Right.
Nubank, for example, disrupted the traditional banking industry with its user-friendly app and its focus on financial inclusion.
Right.
They made banking accessible and appealing to a whole new generation of customers.
It's like they took something that was traditionally seen as stuffy and complicated and made it cool and intuitive. No wonder they're resonating with younger consumers. And Google, well, they've practically become synonymous with innovation, haven't they?
Absolutely. They're constantly pushing the boundaries of what's possible with technology, from search to artificial intelligence to self-driving cars. And they do it in a way that feels accessible and even playful, which helps maintain that sense of excitement and wonder.
Right. It's not just about the technology itself. It's about how it's presented and integrated into people's lives. So we've got this backdrop of survival mode in Brazil's economy. But then we see these companies like Nubank and Google thriving, in part because of their focus on innovation. Is there a connection there?
I think there absolutely is. In challenging times, innovation becomes even more critical. It's no longer just a nice to have, it's a necessity. Companies that are able to adapt, quickly embrace new technologies, and anticipate changing consumer needs will be the ones that not only survive, but actually thrive in this environment.
So it's like that old saying, necessity is the mother of invention. When the going gets tough, the tough get innovative.
Exactly. And it's not just about big, splashy innovations either. It can be about finding small, creative ways to improve efficiency, reduce costs, or enhance the customer experience. It's about that entrepreneurial spirit, that willingness to experiment and try new things.
I'm starting to see this survival mode idea less as a negative thing and more as a call to action.
Yeah.
It's a time to be resourceful, to find creative solutions, and to use innovation as a way to navigate these uncertain waters.
I couldn't have said it better myself. This challenging economic environment might actually be the catalyst for a new wave of Brazilian entrepreneurs and innovators.
That's a great point. So if we were to give our listener one key piece of advice based on all of this, what would it be?
Embrace change. Don't be afraid to challenge the status quo. Look for opportunities where others see obstacles. Brazil's economic future is being shaped right now, and those who are willing to adapt, innovate, and think creatively will be the ones who write the next chapter.
Beautifully said, and I think that's a perfect note to end on. We've covered a lot of ground in this deep dive, but hopefully we've given our listener a clearer picture of Brazil's economic landscape in 2025, with all its complexities and possibilities.
I hope so too. It's a fascinating time to be watching Brazil, and I have a feeling it's only going to get more interesting from here.
Absolutely. Thanks for joining me on this journey. It's been a pleasure exploring these insights with you.
The pleasure was all mine.
And to our listener, we encourage you to continue your own exploration of Brazil's economic future. Stay curious, stay informed, and never stop asking questions. There's a whole world of possibility out there waiting to be discovered.
One of the most striking findings was that simply being a household name isn't enough anymore. The report showed very little correlation between a brand's overall awareness and whether consumers perceive it as innovative.
Yeah, it's almost like saying just because everyone knows your name doesn't mean they think you're cool or cutting edge. That's a tough pill to swallow for some of these big established brands.
It is. It really challenges the old way of thinking about marketing and brand building. You can't just coast on name recognition. Brazilian consumers, especially the younger generation, are looking for companies that align with their values, embrace new technologies, and offer solutions that fit their modern lifestyles.
Yeah, so it's not enough to be on everyone's radar. You need to be on their radar for the right reason.
Exactly.
And that's where this idea of innovation comes in. The report highlights companies like Nubank and Google as prime examples of brands that are perceived as both influential and innovative. What are they doing differently?
Well, both companies have really mastered this idea of anticipating what consumers need before they even know they need it. Nubank, for example, disrupted the traditional banking industry with its user-friendly app and its focus on financial inclusion. They made banking accessible and appealing to a whole new generation of customers.
It's like they took something that was traditionally seen as stuffy and complicated and made it cool and intuitive. No wonder they're resonating with younger consumers. And Google, well, they've practically become synonymous with innovation.
Absolutely. They're constantly pushing the boundaries of what's possible with technology, from search to artificial intelligence to self-driving cars. And they do it in a way that feels accessible and even playful, which helps maintain that sense of excitement and wonder.
Right. It's not just about the technology itself. It's about how it's presented and integrated into people's lives.
Yeah.
So we've got this backdrop of survival mode in Brazil's economy, but then we see these companies like Nubank and Google thriving, in part because of their focus on innovation. Is there a connection there?
I think there absolutely is. In challenging times, innovation becomes even more critical. It's no longer just a nice to have, it's a necessity. Companies that are able to adapt, quickly embrace new technologies, and anticipate changing consumer needs will be the ones that not only survive, but actually thrive in this environment.
So it's like that old saying, necessity is the mother of invention. When the going gets tough, the tough get innovative.
Exactly. And it's not just about big, splashy innovations either. It can be about finding small, creative ways to improve efficiency, reduce costs, or enhance the customer experience. It's about that entrepreneurial spirit, that willingness to experiment and try new things.
Right. I'm starting to see the survival mode idea less as a negative thing and more as a call to action. a time to be resourceful, to find creative solutions, and to use innovation as a way to navigate these uncertain waters.
I couldn't have said it better myself. This challenging economic environment might actually be the catalyst for a new wave of Brazilian entrepreneurs and innovators.
That's a great point. So
Yeah.
if we were to give our listener one key piece of advice based on all of this, what would it be?
Embrace change. Don't be afraid to challenge the status quo. Look for opportunities where others see obstacles. Brazil's economic future is being shaped right now, and those who are willing to adapt, innovate, and think creatively will be the ones who write the next chapter.
Beautifully said. And on that note, I think it's time for us to wrap up this deep dive into Brazil's 2025 economy.
Yeah, I think so.
Hopefully, we've given our listeners a lot to think about, a lot to consider as they make their own decisions and their own analysis.
I hope so, too. I think this is a really fascinating time to be watching Brazil, and I have a feeling it's only going to get more interesting from here.
Absolutely. Thanks for joining me on this journey. It's been a pleasure exploring these insights with you.
The pleasure was all mine.
And to our listeners, thank you so much for tuning in to this deep dive. We encourage you to continue your own exploration of these topics. Stay curious, stay informed, and never stop asking questions.